Hey traders, this is my weekend video. I'll try to keep it as short as I can here. So currently we're in the meat grinder, what I consider the meat grinder. I was talking about it last weekend, and we're stuck in here, okay? And that's some things I want to look at right here. So basically, the top of the range is right here. Let me draw a little rectangle here, and then the bottom of the range right there, okay? And that's what I'm looking at right here. Some things to look at right here. That is your clearly defined meat grinder area. Okay, and we're stuck right here in the middle of it. Okay, some things I'm looking at here. Go ahead and get this over here, and then also erase that, and then also, so from I got a Fibonacci's drawn right here between the 2020 close versus the 2021 close. And the halfway point between those two periods are 42.61. So this, in theory, is the magnet point. Going to be pulling up to the 42.61. That gets you halfway in equilibrium this week if we were to start breaking out of that range. Okay, and then with an ultimate goal maybe as high as 4,400. That's a 61.8 possible rejection. Okay. So that's a few on the upside if we were to continue higher in the markets. The markets are anticipating this month's CPI and PPI numbers, which all hit this week. They're going to be less bad than they were last month. Remember, last month we were getting 40-year high reads on these numbers. Really, really horrible numbers last month. So we have a very it's a very difficult bar to get worse from. Okay, so it's very easy to have less bad numbers than we had versus last month. That's why instead of us being down here near the lows, right here going into this month's CPI and PPI data, we're actually up near range highs. That's what's caused this short squeeze in anticipation of less bad economic data hitting the tape this week. Okay. So that's what I've got thinking here. Okay. So some other things I want to think about here. Right here where we're closing at, this is right here. These candles right here mark the Head and Shoulders breakdown. Okay, and that's right in the area that we are fighting right here, right now. So this is, in my opinion, your initial read, and it was confirmed right here when we came down to this, and they couldn't break down through it. So we are fighting this area right now, trying to decide whether or not we want to invalidate this head and shoulders and possibly break up to the upside. So that's what's going on here in this market. That's why it's taking some time to digest through this inventory. So I'm not for sure if we can or not. So what I got some Andrews pitchforks drawn off of these levels. This high right here and this low right here. And this is kind of what we're in. And then also at the end of this trend, this red one is off this prior high right here. And if you zoom right in here, you see what's going on here. So basically on that low end, we still have not broken out of this lower Andrews pitchfork. We're still at the highs. We still have not got a closing print above, suggesting that the downtrend is still very much intact until proven otherwise. And we could very well this week prove it to be invalidated. But I do want to point that out. Right here is technically a short into resistance until it proves it like it doesn't work any longer. So just remember that going forward into this week. Okay. And this white line right here, that represents the Head and Shoulders breakdown level. You can see how, it was a meat grinder last time trying to decide whether or not we wanted to take it higher. So back in May, early June, they rejected that, and the CPI numbers and PPI numbers quantified that rejection. So now this week we're going through the same thing again. They're anticipating less bad numbers, not good, less bad numbers, and that's why we're up here again trying to decide whether or not we can accept higher prices. So some things I'm looking at here going into next week. First of all, FOMC is your main support now until proven otherwise. So we have our FOMC day, a couple weeks back. This is the level we had. The news came out and we rallied higher. So now this is, what is that? About 39.76 area. That is should be acting as our critical support now until proven otherwise. Another main thing that I want to point out here, we're just fighting this head and shoulders bull bear cross area. Like I said, we did reject the Friday's jobs numbers, never did come back and even back test it. So keep that in mind. That is our new resistance high until proven otherwise. So now we have the 41.59 as resistance. That is the like Friday job rejection here on ES. So remember that going forward here. With an ultimate, if we get above that, going into that CPI and all those numbers, 42.25 could be in the cards running into the CPI and the PPI numbers this week. So just keep that in mind. That is your, in my opinion, this is your resistance. The 42.25 area is resistance area going forward here. So just keep that in the back of your mind going forward here and in your trading. So my main takeaway post the jobs numbers Friday, SPY did end up closing a little bit better than what we had for the Qs. We had some relative weakness relative to SPY here going into the close there Friday. Now remember, we did have a big disappointment out of Western Digital. This is one of your big semiconductors, and they got hit pretty hard there Friday. And it was weighing on tech probably because you had an underperform happening here in your SMH at your semiconductors. So keep that in mind going forward here. Also, just remember here, 8:30. This is where the news came out. 8:30 here for your jobs numbers, and we did close above that. So do keep that in mind. That relationship that the jobs numbers really didn't impact the semis at all. So we want to take that forward in our trading to remember that. And I was also looking at Apple relative to the jobs numbers, and it basically came back up and even back tested those jobs numbers, suggesting the jobs numbers really didn't have a big weighting for companies like Apple going forward here. So definitely keep that in mind going forward in your trading. Okay. IWM, this one here is a big, this thing here reacted exact opposite of what it should have done on Friday. And anytime you see a stock acting exact opposite what it should do, you have to stand up, pay attention to what's going on here. So this is implying a much more bullish stance going into the first of the week in the overall markets. So be aware of that scenario. So basically, we had the jobs numbers come out right here, came down for the open, we blew right past through. I went almost a full one standard deviation past the jobs numbers. So be aware of that scenario going forward here. And this was largely driven by none other than AMC. AMC came out and they bought interest into a mine in Nevada, and they are offering a great big special dividend. And as long as that you buy into AMC shares before August 15th, you can get a position, a portion of that dividend. So just this right here suggests the potential of a gamma squeeze happening here in AMC into the 15th. So it really risky for shorts going forward here. We could actually be going up into the $30, $34 range with a potential gamma squeeze scenario happening here going into that special dividend scenario. So, and plus you have all those Reddit traders all jumping on board in addition to all that. So be aware of that scenario going forward here. Some things I wanted to share here. AMC is the #1 holding on IWM. So, you're almost, well, basically 2 times the highest weighting of any other equity in the index. So that's what's going on with IWM. IWM just went to the moon because of what was happening in AMC. So be aware of that scenario. What should be happening in theory with the bond market or yields, because of the jobs numbers, yields skyrocketed there Friday. So if you go slash 10-year, your 10-year yield, okay, you had a big rally in your 10-year yield there Friday. Okay, that was a really nice yield bid in your 10-year yield, uh, largely driven because of the very strong jobs numbers, suggesting that it was like a 40% chance of a 75 basis point rate hike in September. Well, it went up to 65% early on yesterday or Friday. So they've increased the odds of a 75 basis point rate hike for September. So keep that in mind going forward here. Uh, Typically, what that does, small business, that it hurts small business more than it does larger businesses because they rely on those low interest loans to stay afloat. So IWM tends to underperform in this scenario. But because what happened with AMC, the exact opposite happened, and that is that's an outside uh, scenario that you typically wouldn't see. And in addition to that, the dollar was really strong too, which drove down many of the commodities there Friday. So so what we're basically doing, much of our inflation is being exported in abroad into other countries, and because our strong dollar has managed to negate much of the inflation that most of the world is facing right now, and a lot of the third world countries, they have their debt and stuff financed in U.S. dollars, and they just they're not going to be able to make these payments here in a few months. So be aware of this. These are developing. A very strong dollar is great for the U.S. consumer, but it's not good for the overall global economy. So be aware of what's going on here going forward in your trading. Okay. So that's some of the main things I wanted to talk about here. Now, real quick here, I want to give you a quick rundown of the economic data hitting the tape this week. So we do have China PPI and CPI on the 9th. So that would be Tuesday. So basically, so that will be happening between Monday night, Tuesday morning. We will be having PPI, CPI, and you'll have Japan PPI as well. I don't think these numbers have potentially peaked yet here abroad. So be aware this could weigh on the market come Monday. So be aware. I don't know if the markets are going to anticipate better numbers abroad or not, but I know here in the States they are probably getting better. But what's happening, I don't know if that's going to be the case here in China and Japan, uh, going from Monday to Tuesday morning. Okay. Then also Tuesday morning we have U.S. unit labor costs and productivity costs. Obviously, that's an inflationary data measurement on the industrials, so keep that in mind. And then we have small business optimism out at 6 o'clock Tuesday morning as well. So what we got going on here with AMC, it could be completely negated with the small business optimism numbers coming out Tuesday morning, and we could be getting a sell down back in the Russell going into Tuesday's session. So be aware of that scenario going forward here. Then we have Wednesday. We have your U.S. CPI. Okay, 8:30. And so be aware of that scenario also. I think some PPI might be coming out also Tuesday morning or Wednesday morning as well. So be careful on that. And so we have, I think we have uh, it might be Denmark. I can't remember CPI. Germany might be out at 2 a.m. there Wednesday morning as well. So you have to double check on that. We might have some Germany CPI coming out there Tuesday morning or Wednesday morning at 2 a.m. Then we have really important, really important Thursday evening. We have a 30-year bond auction at 5 p.m. Okay, after market close. So this is potentially going to weigh on the markets and weigh on bond yields going into the end of the week, because we're probably going to see a sustained bid in bond yields going into the 30-year auction later this week. So just keep that in mind. That we have a very important economic data lineup for this week. and it could be. It's hard to say what's going to happen. Okay, and then Friday we have our import and export data. Uh, it's going to give an idea how our imports are doing versus our exports abroad. Okay, guys. So that gives you a pretty quick rundown of what's going on there. And then also one last thing here. That Monday night. Okay, keep that in mind. Norwegian cruises. Travel's supposed to be really good right now, so keep that in mind here. Uh, Workhorse is reporting. That's another. Typically, a lot of people trade that one here. Plug charging. That's another one of your EV plays reporting. Wyndham Resorts reporting. Coinbase. This whole area has been decimated with the whole crypto thing. We're going to get a really good read of how much damage has happened with the 80% collapse in a lot of these cryptos. This could be definitely weigh on your crypto area, so be aware of that. This should be a horrible number, so be aware of that. Got Wendy's there Wednesday. Uh, Fox is an ad-based company. Ad-based company sales have not been very good for a lot of these areas, so be aware of that. Walt Disney's reporting. They have a lot of ad-based exposure as well, so be aware of that. Yeah, okay. Okay, and that pretty much sums it up. So pretty much a light week on the earnings front, in my opinion. You don't have any of the big boys. It doesn't seem like here reporting this week. So be aware of that. So your mega caps, they're not that bad here. The trade desk is also probably going to disappoint too. Uh, Trade revenues are way down this quarter. People walked away from a lot of trading this quarter, so be aware of that. So the trade desk is likely to have a disappointing number as well. So just a few things I'm looking at here going into this week. So thanks for watching my video. Please retweet me at Gumby9662C on Twitter. Like me on YouTube, please. And please leave comments below if you're seeing stuff that I'm not seeing. I really appreciate the feedback. We're all here to make money together.